Weekly newsletter, 13th of November 2022. The data taken over here is of 3rd October and 3rd November and 10th November. The P ratios remains more or less the same, and MG ratios have just gone up, which is market capitalization to GDP. Currently, we can see the GDP and the market capitalization has just gone above that, which is making the market expensive. P ratio is also moving towards expensive zone, not exactly very expensive, but still it is. The RSI level, the top level, we think when the market is overbought is 70, and when it is oversold is 30. We are somewhere in between at around 55. This is the RSI level of 65. If we see the relative strength index at 14 level, then probably the market is at around 66, 67, which is quite expensive for a short term. So for short term, if you see, everything looks very, very expensive. FII's open interest position in outstanding contracts of Nifty has again gone up with 1.35 lakh contracts negative. Nifty is more or less remaining the same, just above 18,000. So, like last week, this week's recommendation again is invest in debt. The reason why we are recommending investing into debt, because here only you will be getting maybe 6% plus return. Then why to take unnecessary risk for short term into equity at this point of time? Well, as long as the systematic investment plans or systematic transfer plans are concerned, I think one should continue and not look at that at any point of time. Any investments into hybrid funds like BAF and asset allocation fund also continue to be as it is. Into some of the aggressive equity funds, I think profit booking is advisable. And then all this rather debt funds looks very, very good. So from this point, if we see the RVCC parameters, the ratio, GDP ratio is 103, as we have already seen. And the US markets GDP ratio is 145, which is same as it was last year. Nifty is above 13-day moving average, but it has just come down as you can see in this chart. So let's see how the weekend and the next week start. So we'll have to see that, and based on that. So yes, from 14th October onwards, we were like in the invest mode. Now from 11th November only, maybe people can book profit and allocate some money to the debt as of now. Last 3 months, the highest returns have come into PSU banks, which is 31%, and metals have also done well, 7% up. IT is negative 5%. Again, a recommendation is to be into hybrid funds, BAF funds, overnight funds, debt funds, medium-term debt funds, and also maybe into index funds. So with this, thank you so much. Look forward to see you next week again.